All right, welcome back to the Jason Gray Show. Go ahead and like and subscribe. Tesla stocks. Wow, what a great day today. Now, this all started because Moody's upgraded the stock to an institutional grade stock, which means to you and me is it's not quite an Apple stock, but it's very similar to those stocks. So stocks that they feel comfortable with you investing in. Now, Moody's is incredibly late to the game on this upgrade. And there's been many people in the Tesla industry and the Tesla forums, and they've just said, why has Moody's not upgraded us? And, they're slow, right? They're slow to reacting when the banking crisis happens, and they're slow to reacting to anything. But the good thing is they reacted, right? And there's a couple more notches up that Tesla can go, and it gives them opportunity to upgrade this even further, which is great. So if they do upgrade us, we get another bump and then another bump, right? So let's be grateful for what we got. Stock goes up to $196 a share as of this recording, about 6.9% increase for the day. Let's all be super, super, super grateful. This has been great. So now let's go ahead and talk about another subject. I've talked about multiple times. There's different revenues sources for Tesla. And let's talk about the mega pack piece of this puzzle. Let's just sort of, digest this and sort of unpack it a little bit of what this piece of the puzzle looks like. Everyone always knows about the car company, and I think people are fairly aware of the full self-driving or the SFD and, and that revenue source. Most people don't know about the insurance piece. They don't know much about the energy and solar and this mega pack piece. So let's talk about the mega packs. So mega packs are finally starting to sort of hit the numbers on Tesla's earnings. And this all sort of stemmed from when they opened up the Lathrop location in California. And they say this Lathrop location can scale up to where it's doing over 10,000 units per year out of that one location. Keep that in mind. That's just out of one location. So they can scale this just like they do with the gigafactories. They can scale this to other locations. It's a very simple project after they get it scaled up. And these, Tesla's great about scaling, right? Elon's great about scaling. And so if they're seeing profits here, what are they going to do? They're going to scale. And they need to scale sort of fast because you have the Inflation Reduction Act money that as these people purchase the mega packs, they get 30 cents back on the dollar for what they're purchasing. So let's look at some numbers. So at the end of 2022, the profit margins on these mega packs were at 12%, which are horrible. And everyone in the Tesla, sphere is saying, this should be a 20, 30, even 40 or 45% profit margins. But remember, they just built the factory. They got to scale. They got to get their efficiencies down, and these margins are going to come into place. And so that's what we're going to talk about a little bit today, is what this sort of looks like. So I think by the end of 2023, their margins should be around 22, 25% on these mega packs. So let's see what this looks like on numbers. So each mega pack on average costs around $2.7 million for just one mega pack. And think about the mega pack itself. It's just a box. It has a bunch of batteries in it, has a computer system and some, relays in there. And then they put it on an 18-wheeler and they ship it off to, a power station somewhere, and they put a whole bunch of them out there. What are the mega packs? What do? They pull in energy, and they pull in energy at low-cost times. So overnight, you know how your energy costs drop dramatically versus peak times. They load this thing up at night, and it gets loaded. Then when peak energy hits, they sell at a higher price, and they make a spread on this with the energy companies. So it's a great business plan. And not only that, they have a service agreement that they have to sign with Tesla as well. So they're making $200,000 a year on just maintaining it for each mega pack. So the servicer comes out there and services it, makes $200,000 a year just to maintain those packs. So the revenue source is just not the one time, it's the maintenance as well and the profits off the software. It's crazy. So let's look at the numbers. $2.7 million for an average mega pack currently. Now, at that, if you average an average car at $40,000 per car, that's 67 cars, actually 67.5 cars for one mega pack. How easy is it to make a mega pack? There's no painting. There's no interior options, no wheel options. There's nothing, right? There's just a mega pack. And how easy is that for them to make money? So I want you to sort of think going forward. And so let's just look for the end of 2023 first, and then we'll look out like we always like to do as Tesla people. We like to look really far out down the road. So at the end of this year, if they were to make, let's say $4 billion in revenue, which I think is very realistic on where Lathrop is right now, that will equal to them around $2.2 billion in profits for the year. And that will grab Wall Street's attention at that point in time. They will look at this and go, wow, where did that $2.2 million come from? That didn't come from full self-driving. That didn't come from insurance. That didn't come from anything else. That just came from the energy piece. And soon as Wall Street realizes that, what's going to happen? They're going to upgrade again, or they're going to now push the price targets up because they're going to realize Tesla has created another stream of revenue that we all know is coming, but Wall Street is not paying attention to. Wall Street really wants to see numbers that are actually really happening, not just talk and saying, okay, we're going to produce this, or we're going to create the robot, or we're going to produce this. They won't put any valuation into it until it actually hits the streets. And when they start seeing real numbers, then they can go and say, okay, well, how can we project out? And we all agree some of their valuations are crazy. They think that Tesla's only going to do 6 million cars per year by 2030. And some of us think it's going to be 10, 12, 20,000 cars per year, or million cars. Sorry about that. Million cars per year. So when Wall Street sort of evaluates this and starts realizing the real numbers, what does this do to our stock price? I really think by the end of 2023 here, if they really do create a $2.2 billion profit on it, that's an added value price to our shares of $50 to $60 per share, just based on energy alone. Now, let's look out to 2030. Let's see if they scale this up. Let's say they scale this up to showing $100 billion a year in revenue, or $200 billion of revenue per year, and their margins get better and better and better. What is Tesla good about? Scaling, figuring out where they're struggling with their cost, and then getting their margins up. Let's say they had a 40% margin on those numbers, and let's say we do, $200 billion. That's $80 billion in revenue that they've added to the bottom line. Those are crazy numbers. I mean, we're coming a multi-trillion-dollar company versus just the cars and energy on its own right. I mean, we're not talking about how they opened up the supercharging stations to just random cars. What does the revenue look like for that? Or just even the Tesla revenue? I mean, the numbers can come in staggering. As we all know, those supercharging stations are turning into little gas stations throughout the country. So this is just such an untapped gold mine that I think people are just not realizing. And when they become to realize this, it's going to be crazy. Guy on Twitter, ZeroSumGame33, follow him as much as you possibly can. His research and his numbers on this Megapacks are literally awesome. Now, he's probably way too far to the hyperbole side of things, but man, his research is really good, and his details on how he sort of comes up with everything and how he's evaluating what can happen here is really, really encouraging for all of us. So hope you like this video. Maybe next time we'll talk about maybe those supercharging stations, what that income can look like for them, and what does that look like for profits in the future. But all this helps. All this stream of revenue creates a situation for Tesla to become a bigger, bigger, and bigger powerhouse that helps us out with our stock prices. Of course, no financial advice for you here. Like and subscribe, and I'll talk to you soon. Bye-bye.